Hey everyone, BC Richfield here, live from the Burb Nest, where we teach you how to trade. So, we've had some requests come in for Bitcoin analysis and also XRP. So, I wanted to put together just a short video for you guys, try and keep this condensed around about 5-6 minutes. Just take a look from naked charts, just to give the perspective of what I'm looking at in the markets and what I'm looking for in terms of triggers. So, before we hesitate, let's just jump straight in. So we are going to start with the Bitcoin chart. Now, I've got this on a daily for a reason. I'm looking in most conditions, but especially conditions that we're facing at the moment, I'm looking for key highs and lows to be swept, to generate liquidity, and then for reversals to the far side of that sweep via interim targets. Okay, so let me explain that a little bit clearer. So, what we're looking for, we have clean highs and clean lows, right? Now, to give you just an example on this before we steam through into XRP, if we take this, that was a clean low, yeah, this would be our clean high up here, for example. When we've swept this, this is when we're getting interested, right? So what we've done is we've taken liquidity from here. We've taken a raid on this area. Now what we look to do, as price comes into here, we're then looking to get onto our lower time frames to try and find setups that sit within our strategy that also sit within the time of day that we're looking to take trades. I particularly favour the London and New York sessions, and especially that kind of crossover period, which I'm going to show you in a bit more detail as we go forward. So what I'm on the hunt for are key highs and lows, and then I'm looking for liquidity to be swept, and then I'm looking for potential reversals through our key setups. Now, to run through with you very quickly, the kind of setups that I'm looking for, if this is our line, right, and we're looking to short, for example, at this line, then what I want to see is price come into an area, sweep or raid that area before closing below, retesting, and this is really, really key, this part, guys, for my strategy anyway, is I want to see a retest of that level, right? That's the low that sweeps the high, right? Now, we're talking about this high here being swept, but what we also want to see, which I'm allowing for with this line, but should give this more clarity, is a high time frame level coming in from here, all right? So let's say that this is a hourly, 4-hourly, or ideally a daily, as I tried to achieve it, a daily level. So that could be a fair value gap fill. Yeah, so the top of the fair value gap. This could be a key support resistance level, or for an example, we could be coming into a high time frame order block, right? So that's what I want to see there. I want to see price come up. I want to see it raid that side for liquidity. Then this move down here below this low and a retest of this area shows us that price is then ready to move. Okay, so that's what we're looking for here. So forget this example back here. We want to know what's going on with price right now. So as we can see here on a daily scale, we're in a bullish structure. Okay, so that shouldn't be ignored. We always want to be trading with the bias. However, what we can also see as we look back here, if we take this naked high here, or we take these relative equal highs here, which are definitely of interest, and we draw these across to here, that's when we become interested in this area for a pullback. Okay, so with that in mind, let's extrapolate that and move that forward and say, okay, well, what are we looking for here? Same thing, right? We've got this key high, and we've now had a sweep of this high. Now, the key thing for me as we sweep this high is the reaction that we get on the lower time frame. So if we're looking to trade this corrective move down, yeah, our assumption is that we're coming down here to find liquidity, then we want to know what potential liquidity lays under here. So for me, if we were looking at this as a correction, the first thing that would have my attention would be this level here, because we expect there to be stops resting under here, all right, which generate liquidity. So now we're going to dive into the 15-minute time frame, and with the power of hindsight, we're going to look back at this move here. So as we can see here, I've got this indicator on which is showing me, among other things, but the key thing that I'm looking for here in my trading sessions, I'm looking to trade London, and I'm looking to trade New York into the London close, all right, which is this session here. So what I'm looking for is really, really simple. I want to see a raid, okay, on a high time frame level, that's our daily level here, right? This one that we marked across resembles this high. As price comes down and it raids this level, we can see the reaction that we get. That by itself isn't enough for us to take an entry, okay? I'm then looking down on the 15-minute or the 5-minute, sometimes lower, but I'm going to cover ideas here on the 15-minute for price's corrective move, all right? So once we've had this interaction here, let me draw this back here. So as soon as price triggers this, we expect some kind of corrective move. If our assumption is correct, we're looking for a trade with inside this region here. Now, London and New York, right? New York opens here through to the London close. Now, we allow this a little bit further on because then you're going into the New York PM session here. But the idea is we want to see these formations around this area. We get our raid, yeah? Now what we're looking for is we're looking for the same, but on a lower time frame. We want a key high, all right? In which case is this. We can see the sweep that we get here. Then what we're doing is we're looking for the low that swept that high, all right, which we can see down here. Now, for me, I want to be executing this on a 5-minute time frame. So we've got our raid in place. We can see that we get that here. But as we drop down on the time frames, we can also see that as we get that raid, this is the low that sweeps the high, right? That's what we're interested in. Remember our reversal pattern. As that comes up, it fails to close below this low. Yeah, this is the origin of the move. So in that time, we then have another raid here. So we discount this. And we say to ourselves, this is the raid. Now, where's the low that takes the high, which is here? And this becomes what I coin the breaker line, right? Or our entry line. Nothing unique about this, guys, but this is purely what you're looking for. Is you're looking for a raid on liquidity above, and then for price to come down, close below. And what you'll notice about this is that we don't actually get the close below here, here, or here. Notice their wicks. That's not good enough. We need to wait for this close, all right, on a 5-minute time frame. Then, from there, we take our short position. And as soon as price comes back, we trigger our order that's on that breaker line or the dotted line, right? Our stops go above the swing high, all right? Then we're saying to ourselves, well, where's a realistic target? And we always want to make sure we're using good risk management here, all right? So for me, the first area I'm looking for is around these lows. See, we've got these lows here, relative equal lows. There's a few of them. Now, as we look at those, you've got a 1.3. What you're saying to yourself is the risk to reward worth that for a 1.3? I'm happy to enter on that based on the fact that I feel like I've got a high probability setup. However, what we're then looking for are lows below. So we could be looking at this low, and here we're on a higher time frame. We definitely have relative equal lows. So I like that as an extended target down here. But we want to know, we want to be able to get to a level 1.2 to 1.5 as a minimum in terms of R, yeah? Because then if we get down to that level, we might want to flip our stops to entry, or we might want to hold for lower targets, all right? Now, as we can see here, we just about hit the level below these relative equal lows down here, all right, which would have given us a 2.5 R trade. So with that in mind, let's move back to our daily and say to ourselves, well, what can help us in terms of current price action? Now, if our theory is that if we've raided this high here and price is moving down, then what we want to see is a raid in the opposite direction. So this here would definitely be of interest, okay? So we want to make sure we use our magnet tool so that we get that accurate. And then we want to label this up. I call it a raid line. Again, it's just a break of structure or a key high or a key low. Now, as we look at this here, we're saying to ourselves, okay, do we think that price is looking to move back above this high? Bearing in mind we've taken liquidity from here. Obviously, the liquidity from here and here as well as we go above. So we're more likely to get a move lower or higher. Something else we need to consider are the fair value gaps, all right, or inefficiencies. So this is where a 3-candle pattern, 1, 2, 3, we have this gap between, where this wick and this wick don't cross It makes an inefficiency, and we see that as a draw on price. So as we're looking to this, we can certainly be monitoring this low here. We can see we get the sweep. But I'd also be looking at this low here that lives within this inefficiency. And then talking about that on a higher time frame scale, if we're looking at what's drawing price higher, then my belief is that price is being drawn up to fill this inefficiency here. And if it's going to move higher, then it's going to attack the stops that are above this high here. All right. If we break down from here, however, then we're looking towards this low and we're looking for reactions lower down. So that's the idea. Now we're going to rip through XRP using exactly the same principles. So here we are. Where's our high time frame draw on price? Here's our daily fair value gap. We can see that we've only just kind of entered into this before we got that kind of corrective move backwards, but we've not had a real significant pullback. So we've got our higher low, yeah? So here's our low, yeah, to a high, higher low, to the high, higher low to a higher high. So now we're in a bullish structure. So we should be favoring bullish plays. Henceforth, when we close that candle here, what do we look for? Exactly as we just discussed, we're looking for sweeps of key liquidity, right? Below this low here. Now, you can also take this low here. A good way to add extra confluence is you say to yourself, well, once you raid that candle, you want to see price close back within the range of this candle, yeah? So we can see here, we got this raid here, but price closes just outside of it. That can tell us that price isn't quite ready yet, so we can discount that. But as price comes into this level here and we get that reaction up, what are we then saying to ourselves? Well, we're then looking for the untapped highs of here. And then if it had moved beyond that, here, and eventually this one. However, we got the reaction here, right? Which when we dive into the lower time frame charts, we can see why this gave us that nice short setup, all right? But let's just mark up current price action as well, because there's something that I'm conscious of here, which is even though this is inside the range, meaning that we've got an inside bar candle here. Let me just mark that up for you. This is the inside bar pattern. And this is our inside bar candle, okay? For anybody that's not aware of the inside bar pattern, it's when we get this candle and the next candle closes within the high and low of the previous candle. This makes the inside bar pattern. This becomes the mother bar and this the inside bar. They both act as ranges. This is our main range. This is our inner range. What we're looking for, like with range trading principles, is when we breach one of these levels and price comes back within, we then trade it to the far side of this range, normally via an EQ, all right, which is the 50% line, which would go along here. So as we got this raid lower, taking out this liquidity here, and what I love about this is we can see we've got these relative equal lows here, right? So I say relative equal lows, the term I learned from ICT. You definitely go and study the price action side of that. And as we can see, we mark these up here, relative equal lows. So now we've run that liquidity down there. We're saying, okay, well, if it's taken those and it's looking to trade higher, where's our reasonable target? These highs. First of all, the inside bar, this is just naked liquidity, right? Untapped liquidity at this point. We've taken the lows, now we're coming up to the highs. And then ultimately our goal up here. We fail that, but we've then come back down here to run these lows again. Now, my concern here is that we haven't run these key lows, and we need to consider the fact that these lows have already been run. Okay, so let's just drop down to a 5 minute again. I'll show you the raid that we discussed there. And then we can play that into the ideas of what we're then looking for next. So remember, as we were saying before, we want to see this high time frame raid, which we've got here. This is this line, all right, equates to this one as well. So the price comes above, closes above here. We've got our high time frame raid, yeah. Now what we're saying to ourselves, okay, once we've raided this, do we then get a low time frame raid, which we get here, okay? So we can mark this up, make it consistent so we keep it the same color. So we can see we get our high time frame raid here, and I'll draw that across. Now, what we're looking for here, we're looking for the low time frame micro low, which is this. Why is it this one? I get this question quite a lot, because we can see we've got Candle finishes here. This is the low. This low's higher, right? That low and that low are higher than this. So on this scale, I'm happy for this to constitute what I would call the breaker line. This is what we're looking for in terms of our entry line. Like we talked about before, we simply take our short position. We need price to close below. So it doesn't close below until then. You can see this candle retests it here, but if not, you get a couple of other chances to retest here. I put my stop loss above the swing high there. And then my first target is going to be down here. I would be conscious, however, of these relative equal lows here. But like I say, it has to be a 1.25 to 1.3 to 1.5R minimum for me to take the trade, right? But what we can see is we've got a really clean target down here, and we know that we've got other clean targets here and here. So that's what we're aiming for ultimately, okay? We can see we get a nice 2.88R trade. We don't need to be greedy with this. Doesn't come back and threaten our stop loss at any point, and it trades to the downside. So what does this now tell us about the current situation? What we can see here, as we zoom back, is we've got our levels. So for me, I'm waiting for price to come and interact with one of these levels. I want to see price interact here. All right, on this line. Or if price runs up higher, I'm looking at that high and then obviously the liquidity that's sat above there. I hope that's been helpful, guys. Don't forget to come and check us out at the Burb Nest. Come along, you can get a free trial. You can find all the information in the description. Hope you have a fantastic week. BC Richfield, BC_Richfield, if you're interested to follow me on Twitter. Hope to catch you guys around the nest.